Hello, good morning, guys. Today we're going to be doing a quick tutorial on TPO charts, otherwise referred to as time price opportunity. Now, for those of you who've never come across time price opportunity charts, essentially the idea is to explore the concept of how much time price spends trading in a specific area. So to do that, the system has developed what's called TPOs, where each letter represents a half an hour period. Now this was built against the futures market. So at the time, Chicago Board of Trade, the guy who put this together, obviously used to do this for CBOT, and then he died, and obviously now the stuff is all public. But what it allows a trader to do is to understand where there is balance and where the market is likely to break out, where there's a concentration of time price opportunities or TPOs. So it has various uses that you can't exactly do with a standard chart. Of course, with a standard chart, all you get is the graphics, you get the back candlestick, you see the open, you see the close, and you can see the representation of what looks like a really bullish candle, but you can't really see what's going on inside of it. I suppose you can try and cross time frame analyze, but obviously in the heat of the moment, if you're trying to day trade and you're trying to make a decision, this is a lot, it's a lot harder than it sounds, cross market analysis. So the beauty about TPOs is that you can actually do it all there. So here I can see the entire day's range, so I can see dynamically what's going on within the day. And inside I can see the TPOs. The colors represent the different sessions. Well, because I'm trading currencies, I've kind of modified it to suit me. So obviously green represents the Asia session, red represents the London session, and of course blue represents the New York session, right? So I can basically see, obviously the first letter A would be the first half an hour, i.e. in the London, New York, or in this case it's blue coded, so this is the first half an hour in the actual New York session. So stuff like this is really, really helpful. Now if I was just going to take a moment there, just so we can see how informative this kind of chart is. So I'm going to zoom in at this stage, and I'm going to take one of these days in isolation. Right. So this obviously I'll tell you a bit because this is the most recent price action, and we can see at this point in time that we've had some short covering yesterday. The market traded slightly lower, but we have what looks like some initiative buying. But we will get into the nitty gritty of TPOs and future videos. For now, I just wanted you to get the idea of how they work if you've never ever used this stuff before. It's used a lot in the futures market, so a lot of the big traders, a lot of the big hedge funds would actually be looking at TPO charts. Now they're incredibly expensive sometimes to get hold on from a retail point of view, so if you're not willing to pay money for a chart, this is going to be quite difficult to get hold of. Some of the big companies that actually utilize this, it's mainly futures companies that offer futures, so you will be talking about CQG, a few of the other decent platforms out there that run TPO or plugins for that anyway. I think eSignal does, not too sure, but I know definitely CQG does, and CQG obviously has one of the best when it comes to time price opportunity charts. But again guys, this is obviously I've managed to get something for MT4, which is great from a retail perspective. But yeah, I mean, ideally, if you're going to trade this stuff, you want to be plugged into some kind of exchange or with a broker that has an actual LP, like liquidity provider. Because believe it or not, I'm hoping to I'm hoping when you guys obviously come to the Traders Club webinars, I can fill you guys in on a lot of the stuff that brokers do. A lot of the stuff that brokers do behind the scenes. Now, I can assure you, there are very few brokers. I mean, my preferred broker is FX Pro, because obviously they've got a prime broker, and that's important to me. And Morgan Stanley is their prime broker, which means that I know that there's an LP behind the scene, and that's important, of course, if you're trading and if you're going to trade a little bit of volume as well. This is important to know. Obviously, There you go. But there are lots of things, actually. There's a lot of flexibility. I mean, people see their brokers as enemies. Yes, some brokers are a bit dodgy. But for the most part, you can have a conversation about you with your broker in terms of where you sit performance-wise and how they execute for you. Now, people don't realize this, but brokers can choose how they execute for a client. So not having a close relationship with your broker could potentially be the reason why things are not going so well for you. But for another day, ultimately. But yeah. So what we're looking at here, back to the TPOs, and what we're actually looking at here, I'm going to take this candle in isolation. There's a lot more information going on here. So here we had a day pretty much where in Asia, so we can see end period, right, in Asia, which was pretty much the last for my Asia session. Some people, they might code in the time a little bit differently, but based on my knowledge, I pretty much prefer this kind of setup when it comes to actual, setting up the chart between Asia, London, and New York. So anyway, at the end period, we noticed that the market traded lower. In this case, this is a dynamic value area, so this would have built up over time. So we always take the shaded bit is what we call the value area. So we take this zone to represent so we take price's action against this candle's value area, because this will be dynamically developing. So it does not act as a good reference point. So what we've got here is end period. So this is pretty much the last period that we traded in the Asia session. And we got in this, whenever we see these what we call single prints, okay, whenever we see a single print develop, we assume that this has been a responsive buyer. So somewhere in the Asia session, a responsive buyer stepped into the market and supported it. Now, prints are very useful. Now, normally you will not be able to see the print very clearly on, say, a basic candlestick chart. You may see a bit of a tail, but we all know, if you traded a long time, you all know tails can be misleading. So you're not really necessarily always going to buy on what appears to look like a doji. But in the TPO chart, we can see it's a single print. Now, what's important for us is where the single print occurred. Now, we know the market opened within the previous day's value area and then immediately started trading lower, which, of course, for most traders, the instinct would be, well, the market, we've had a considerable short day. This looks like an indecision candle. So at this point in time, we assume that the market is probably going to be terribly short. So obviously you jump into the price action and then you attempt to short the market, right? So usually we opened in Asia, the market opened within value, didn't trade back up. The next session, which was the next 30 minutes, right? Obviously, which generally denotes the balance area. So in futures, you'll get a generally wider balance area. In currencies, you don't, because obviously that early in the morning, there's not a lot of movement in the market. Whilst the balance area in the futures market is determined by the first 30-minute sessions inside that market. Okay, that's usually when the floor traders come in and they obviously determine the day's range. However, in the currency markets, on the other hand, no, we obviously the first 30 minutes is pretty much just, it's a rollover market. So it's just basically the next day, first 30 minutes of the next day. So the balance area always is smaller when we're looking at the currencies. But what we did get, however, is the market started to trade lower. So we see C period printed lower, D period printed lower, and so on. And all the time, the highs of A and B period were respected. Okay, so we can generally see that this market, the rotation of the market, is generally one of a downside fashion. So we would have been bearish in the morning. So we came out of yesterday's value area and started trading lower. Now we got a single print outside of the value area, but within yesterday's range. So we had some, i.e., responsive buying at this level. So the market immediately came back during end period, obviously, to trade back into value. So, during the London A period, sorry. So again, we got responsive buying from end period, and then we opened into London outside of the previous day's value area, and then traded back in. Now the idea comes, if we were to trade back into value, right? So in this case, this is a dynamic value area, so it would have built up over time, right? However, in this case, we developed a block. We traded eventually back into value. Now, if we do trade back into value, there is a 70% probability that we will trade within the day's range to the upside and eventually trade the entire value area, right? Now, this is the point where we have to start being educated about this stuff. So we're not just going to assume that we're going to trade the entire range of the day. Not likely, not always the case. Sometimes yes, other time we can see that the previous day's value area was quite big. There was a lot of value in this day generally from a TPO perspective. So we cannot exactly assume that we're going to trade the entire length. So from an educated perspective, we can generally see that, okay, based on the activity, there's a likelihood that we're going to trade a good portion of the value area. So we got a few things we could bear in mind the moment we traded back up into this zone. Now we could have taken 50% of the value area as a target, right? That's one way of doing it. Or we could have looked for another reference point, like a point of controls, for example. But from my perspective, the moment we traded into the previous day's value area, there was a very good chance the market goes up. Okay. Now this is based on the Bell distribution idea. So for those of you who are big on statistics, you would find this is quite useful. Right. So you can look, if you've never heard of the bell curve, then you should check it out ultimately. But yeah, but there you go. So we eventually, when we opened into London, we started to print at this base, but we were never taken out the low of Asia. Now the Asia hands, think about it, the Asia hands are weaker hands. They almost always tend to be weaker hands because it's the Asia session. So if in the London session, the bigger traders are following the lead of the Asia session, it could mean two things. One, it could mean the responsive buyer chose to trade through the Asia session. For whatever reason, I do not know, but it is a sign that for cable, which is predominantly a Western pair, to be traded so heavily and support the market in the Asia session is normally a sign of a very big buyer potentially in the market. Right, so we started to develop support, as we can see by the multiple TPOs that went through, in this case, quite a couple of sessions, failing to overcome the lows of the end period in Asia. Eventually, we traded back up into value and then continued printing higher. By the time we got to O period, which was the final period for me in my London session, then we were pretty much more than 50% of previous day's value range. We continued to trade up to roughly about 70% of the previous day's value range, and then we got a responsive seller. Again, by the single print, tells us that a seller entered the market. So this day is kind of a fairly balanced day. There was free trade in the market. We had both big buyers and big sellers acting in this market, so the market is balancing. Now from experience, when I see this kind of price action, I assume it is short covering from the previous days. So if we zoom out, we can see that the market was printing lower value areas and generally trading lower, so there were a lot of shorts in here. At this point in time, I think the shorts are concerned about something, so they started to liquidate some of their positions. At the same time, we had buyers joining in, and there was obviously some sellers participating here, which we will normally, because it's taking place in this zone, we'll normally say relative to the previous day, this was some kind of initiative selling, okay? And rather than responsive, in fact, it was probably some kind of initiative selling. So again, we can see that taking place here. So this gave me the idea that the next day, the likelihood is we are going to be short. So we should generally trade within this value area. And I was expecting that this zone here, where we got this initiative seller, would have been a very strong resistance area, because I can see a single print within a value area. It's a very good sign that, of course, this is an initiative seller, so someone was happy to sell this market at this point as well. So we had a lot of short covering, so the day balanced fairly well. The short covering continued into the next day. We can see that the ranges even tightened. So a lot of this day was free flow. If you're going to trade Friday, you'd have had to rely on the TPO count. So clearly there was an imbalance at some point between demand and supply at the base. So despite closing London slightly lower, again we got a single print suggesting that someone big stepped in here again to trade this market. So there's a lot of activity here, so there's a lot of balance going on. So the key is that at this point in time, the value areas are beginning to strongly overlap. So the reality is that we'll have to see how Monday goes. Are we going to trade out of this value area, or are we going to continue trading lower? Obviously, we can see the market close within value again, so there hasn't been any real desire to go short, but there hasn't also been any real desire to go long. So the market did trade a lot lower through the day, most of the day in the London session, and but for the most part, again, we stayed within value. So again, the trick was, if we were looking at this chart, at some point we were free flowing and then we started trading back into value, there was a very good chance we were going to trade the entire value range. In this case, we traded more than 50% of it. So again, I always like to think once we're back into value, 50 to 70% of the range is a good target to aim for in terms of trading back. Now, sometimes if it's a tight value range, there's a higher probability that you're going to trade the entire length of it. So anyway, this is kind of a brief introduction to time price opportunity. But as you can see, without a chart, there's a lot of information I can synthesize from this chart and make good trade decisions, place myself in good trade locations, especially in the smaller time frames. But I'm also using the smaller time frames for my entry, but I'm able to expand my vision beyond a 30-minute chart, way beyond a 4-hour chart into a daily time frame, and if necessary into a weekly time frame, because as I take this chart out, I can see the overall movement of the price action. I can see where the value areas are, I can see the point of controls, I can see a lot going on from this specific chart. And if you look to the side, so right here, you will notice something interesting. We've got the price, obviously, and we've got the TPO prints, and we've got the volume prints. So again, volume has not been ignored. And obviously in the futures market, we understood that volume was very, very important. And again, you know, there's some great techniques around it. But again, talking about that TPO imbalance count, obviously we can clearly see that eventually the New York session came to trade higher within value. And if we look at the base below the point of control, there was generally a propensity to buy this market through the day. So despite closing lower, there was a bullish kind of theme here. So all the TPOs were concentrated on the downside. So anybody trying to be long this market would have been much profitable later in the day, and traders trying to be short the market would have been profitable earlier in the day. So there was an opportunity here for both buyers and sellers to make money, and this is what this is generally a day that, you know, there's been no clear control. No one's controlled this market. The traders been facilitated from the highs to the lows, generally consistently, right? And we can see that reflected on the TPOs. There was a lot of TPOs taking place on the day, a lot of volume too, but ultimately, you know, there was a lot of concentration in the trade. So this all helps, all right? So again, if we're trying to look at the point of control and trying to add up some balance, we can see the TPO count here is fairly higher, and it was like this for most of the day because I was watching this price action. So again, the likelihood was that we were going to trade back into value and hold it and possibly trade up some highs. So again, if you were trading the New York, you would have pretty much done fairly well on this day, and eventually the price action closed on the high. As we can see, the O period we closed pretty much at the top of the value area. So guys, hope this was fun. I was trying to keep this under 15 minutes, but obviously giving a talk on time price opportunity, it can be tough to do. So at least you get this point, and well, I look forward to seeing you all at the Traders Club, naturally. Any questions on TPOs, you know, feel free to Skype me, send me an email, you know, follow me on YouTube, you know, and ask me questions around this stuff. And if you've never heard anything about TPOs, there are a couple of good books you can have a look at. I'll suggest starting with Mind Over Markets, and that will sort of give you an idea of how to utilize, i.e., TPOs in a proficient way. But ultimately, this is stuff that I'll be looking at in my live trading room, and obviously we'll be doing a lot of trading surrounding TPOs as well. I'm predominantly a cable trader, so you'll see a lot of my day trading revolves around cable. Alright guys, have a wonderful weekend, and hopefully see you guys all next week.